Hello everyone, today I'm going to discuss on how to use fundamental analysis to pick stocks. In a nutshell, fundamental analysis is used to find long-term investment opportunities by studying everything from the overall economy and industry conditions to the financial strength and management of individual companies. This includes company news, management team, balance sheets, dividends, earnings releases, and various ratios. But in this video, I will skip the complicated stuff and cover only 5 basic tools in 5 minutes. I will also use real-life examples, and by doing so, I hope it's easy for everyone to understand. Before I dive into the detail, as usual, hope you can help with the YouTube algorithm by liking this video. Your little support means a lot to me. First of all, investors should select industries that are growing rapidly, such as artificial intelligence, cloud computing, cybersecurity, electric vehicle, and metaverse, similar to how smartphone and e-commerce dominate the world over the last 2 decades. So think far and pick sectors that are emerging now and will grow significantly in the years ahead. Next, the company that you shortlisted must be leading the growth, or at least growing with the industry. For example, smartphone industry was rising many years ago, but BlackBerry wasn't able to keep up with the pace. Likewise, in the electric market, Tesla is growing massively, but legacy car makers like Ford and GM are struggling. For info, in the recent earnings call by Tesla, Elon Musk, the CEO, shared that they can achieve minimum 50% growth for this year. Impressive. That's for current growth. For future growth or sustainable growth, look out for initiatives like entering new markets, partnerships, acquisitions and joint ventures, winning new contracts or customers, developing and launching new or improved products, and more. An example of entering new markets and launching new products is Microsoft, who is no longer just a Windows OS company. They have entered the gaming and cloud computing industries. Examples of acquisitions are Facebook buying over Instagram and Disney's acquisition of Marvel Entertainment. Next, to sustain the growth and capture market share, the company must have durable and sustainable competitive advantage, aka economic moat. This can come from different sources and forms, for example, unique business model, unmatched technology, ecosystem with high switching costs, trusted brands, intellectual property, and supply chain. For example, Apple created its own ecosystem that makes it hard for consumers to switch brands. Usually companies with strong moats are the best among its peers, or at least the top 3. So try to identify those that are performing better than the other companies. For example, in the cloud computing sector, the top 3 are Amazon, Microsoft, and Google. When we talk about key personnel in the company, naturally we will think of the CEO. But I also wanted to share that key personnel can also consist of its other management staff, engineers, R&D team, etc. Companies like Tesla, Apple, Facebook, and Microsoft are always hiring and battling for top talents. You can tell by seeing employees moving across these few big companies. But going back to the CEO, it's kind of obvious that a good CEO is critical in the growth of a company, as he or she leads the management team and is responsible for the company's image, research, growth, innovation, and strategy. I mean, a company can be in a fast-growing sector. But what if the wrong people are making key decisions wrongly? Once again, look at BlackBerry and maybe Dell. On the other hand, a good leader can almost rebuild a company. One example is Satya from Microsoft, who took over the company in 2014 and brought Microsoft back from the edge of irrelevance by expanding into other segments. Prior to that, the company was stagnant, and this was reflected by the stock movement. As you can see, it was stagnant in early 2000s and then went up to the moon recently. To add on, try to look for companies with visionary leaders such as Tesla's Elon Musk. The only issue is Elon's tweets can cause massive volatility in the company stock. The fifth area to look at is the financial health of the company. Some of the questions will be, is the company in debt? How much revenue are they making? And is it improving year over year, etc. Find a company with little or no debt, best if they are a cash cow with huge free cash flow, and have solid top and bottom line. Though I am an advocate of fundamental analysis, I think combining it with technical analysis will offer greater value in your research process. That said, I also believe there is no one correct or perfect way to analyze stocks. The goal of stock analysis is to find companies that you believe are good values and great long-term businesses. So do what you think is suitable for you and don't be afraid to make mistakes. More importantly, you learn from the mistakes and work your way to become a better investor. Alright, that's all for this video. Do you use fundamental analysis to pick stocks as well? Let me know in the comments section below. Lastly, thanks for watching my video. Hope you can like, share and subscribe to my channel to show a little support. Thank you.